Welcome back to the Bubba Show. Todd Bubba Horwitz hanging out with my man Scott Shellady, and actually we're doing this live on camera as well, and we'll be able to send this YouTube out to you. But anyways, I wanted to bring Scott in and actually have you all have a chance to meet my friend, be my partner, and one of the most experienced traders that has been on the floor. I've been on here, what, 28 years?
Yep. And in my 28th year. 28th
year, okay. And you were in London as a broker. You're in Chicago. You're kind of a worldwide. You do a lot of stuff in the energy space. You do a lot of stuff in the grain space. You know, you bring a lot of expertise to the markets. You know, and you're the guy who said, I believe it was about 6 or 7 months ago, when the 10-year was back near almost 3%. You said that son of a gun is going to 1.5. And sure enough, here we are at 1.7 or so. What do you see? What makes you see stuff like that?
Well, first of all, the monetary policy that we've seen over the last 18 months, I don't see a return in equities like we're going to get in bonds again in 2015. Equities way outpaced, return-wise, the equity markets last year. And I think with that stronger dollar and the unwinding of QE, we've invented some volatility around the world just because people don't know what to do with their cash anymore. There was a search for yield that's now been pulled back, and now what do we do because the U.S. is not doing their QE anymore? Obviously, we're going to see some maybe out of the ECB. We're seeing some out of Japan, but with that search for yield now kind of pulling back a little bit, volatility is going crazy. Well, where else are you going to want to be except for bonds? I think that you're going to see some real big volatility in the equities, and all the while these bonds make march to 1.25 in the 10-year.
You know, one of the things that bothers me as a trader, as an investor, as a commentator, as a guy that's involved in the media, I hate when people put out that phony crap. You know, like 5 years ago, it was the death of the U.S. dollar. That's no longer going to be the reserve currency. You know, then it's another problem. You know, and they always try to create problems, whereas a guy like you just kind of explain it how it really is without trying to peddle fear, which is one of the things we're bringing to the new product, is a real straightforward approach. And I can appreciate that because, you know, I've known you for a number of years, and isn't that the most important thing, is to bring somebody a straightforward approach so they can get a real understanding?
The only way I can tell you that is that I've lost more money trading from fear. And so now I try to take a step back. And I think there was a time about 5 years ago, and I think we talked about this earlier, where the world, or at least the U.S. market, was panicking about the dollar not being the peg anymore, not being the reserve currency. Well, having spent over 11 years in London with a lot of friends that are English, somehow they're having a fine life with the sterling. They're not worried about the sterling not being the reserve currency anymore. And then I also happen to be the managing director of the largest Japanese bank in London, so I spent a ton of time over in Asia. The rest of the world isn't the reserve currency, so somehow they're all making money and having a nice life. Why should that make me be scared and do something stupid? It's okay, whatever the reserve currency is, it is, and let's trade it. So it took me a long time, 28 years, to realize I need to start trading what the market's going to do, not what I think it should do. So those types of things have kept me in good stead, and a good solid upbringing. My father was a farmer, that helps too.
Well, yeah, and again, that's another thing you bring to the new newsletter, and what we're trying to do is you bring a real scope, okay? You bring a real farmer. I mean, look, you can really talk about, when you talk about the crops, you really understand what you're talking about. So, you know, when you look at the farming space, you know, we know it was a rough year for them. Okay, why? Because, listen, the planting is expensive. It's not cheap. And we just saw the results from Caterpillar of how rough a year it really was.
And here's something I can bring to the table, because we've got land, we lease land out. I speak to all the farmers. It's a competitive bidding process. And I can tell you that last Saturday I sat down with some guys in the local tavern, and as much as the board or the futures markets come off in price from, say, $7 to $3.50, it's halved in value. Well, guess what hasn't halved in value? Their input costs, the seed, the fertilizer. So these guys are stuck, and I know what it costs them to open that land up, to get it ready to till. And these land leases are all having to be unwound and redone because it's been a really difficult time for these guys the last 18 months. So this year we're going to need to see some sort of scare or some sort of demand story to get these things rallying, because the farmer's going to have another tough go.
You know, what do they do? You know, I know that farmers are notorious for storing stuff when it's too cheap. Now, obviously, if they have another bumper crop and they're already storing, what happens then?
Well, I heard stories of only 20% of the last bumper crop was ever really sold. And the reason why it wasn't sold is that because the farming economy, while the rest of the U.S. 08 to, say, 11 or 12 was doing poorly, farmers were doing very, very well. And they invested in cement and buildings to put it in. So they might have a little bit of room left still, but there's not going to be enough room to be able to take another huge bumper crop. So we're going to have to start moving stuff, and that's why I'm kind of leery about wanting to get behind buying everything right now. I want to see how this weather plays out.
Understood. And Scott, you know, I'm so glad to have you on the team. I can't wait to get this information out because, again, it's you and me talking from the heart, along with Keith and the Badger and the others, where we're just really telling you really what we think. We're not telling you what to do. We're not trying to fear you into making a bad trade.
Right.
We want to just provide you with the right information. So, Scott, it's great to have you aboard.
Love it.
Thank you so much for being on the Bubba Show.
Good opportunity. I'm great to be here.
Thanks, man.